The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN just after 9 a.m. Eastern Time. We got about 24 minutes to go until the start of trading, and you got markets basically mixed right now. You got the Dow ripping lower by 329 points. You have the S&Ps positive by 1 this morning at 63.97. We have the NASDAQ 100. We're positive by 48 points. You accelerate higher right towards the close. We got Google, we got Tesla this morning. We'll jump into those. But the NASDAQ 100 up by 0.2%. The Dow negative by 0.7%. We're trading lower right now, 44,886. And you have the Russell off by 0.5%. Bitcoin just chopping around near about 118,700 right now. Kind of where we've been all this week. A little volatility, but right in the middle of that trading range. Crude. We're down to 64.71 yesterday. We got a 66 handle yet again, 66.08 in the price of light sweet crude this morning. Gold, it's not stopping. We're down almost $100 from where we were yesterday. We just hit a low in gold of 33.5520, and yeah, as of yesterday, we were at 34.5170. We take a look at the daily on gold, and put that price point there. We got a ceiling of about 34.50, as high as about 35.09 was the high back in April. You had a high in here, a gold of 3,400 on the dot. 34.76. And now we're trading at 33.62. Gold rejects that high yet again. Now, yields, the dollar, everything in focus. We got the 10-year. You have yields rising, right? We got to get that one off. We'll fix that one. But check out the short term, lower price, higher yield. The 10-year at 4.44. Okay, 4.44. The yield on the 10-year, and we jump over to the dollar DXY. And yeah, we have a little bit of a bounce in the dollar. But folks, all things considered, okay, I talked about this yesterday. On July 1st, we had a 4.19% 10-year. We have a 4.44% 10-year, and the dollar is not far from where we were. As in, you have dollar weakness regardless of the yields right now. You get the dollar pushing 97.41, and we have the 10-year at 4.44 right now with yields on the rise yet again. Okay, we jump over to the VIX Volatility Index this morning. How's that for volatility? No volatility whatsoever. We're about to get a 14 handle in this market. Now, there's no fear and no reason to be selling this market. We're coming into earnings, of course. We'll get into Google and Tesla, as I mentioned, in one moment. But boy, when you got a VIX approaching 14, you got the NASDAQ and the Dow and the S&Ps at all-time highs. Quite a recipe for higher prices in this market right now. Okay, we jump over to Google shares this morning. Google catching a lift in the pre-market. You're going to be up by $7. Look at this equity, man. Big numbers across the board. We're going to open at almost 200. You got highs out here of 208.70 for Google. Yeah, we trade down to the lows of 140. And let's get into some of the Google numbers because they got some strong numbers here. Let's get into the headline numbers, okay? Revenue, how about $2.4 billion more than the market was thinking? Right? $94 billion was expected. They come in at 96.43. Earnings, they beat by 13 pennies a share, 231 versus 218. YouTube revenue beats 9.8 versus 9.56. Cloud revenue beats. Traffic acquisition costs higher than expected. Okay, so everything's higher. They're spending more to make more. Overall revenue growing 14%. The market was only looking for 10.9%. Whew. Now, they are going to be spending more on AI in 2025 than anticipated. Okay, in February, they said they're going to spend $75 billion in CapEx. That was above the $58 billion they were looking for at the time. But guess what? Now, $85 billion is what they're going to be spending in fiscal year 2025. Strong and growing demand for our cloud products and services. Yeah, and they expect to further increase CapEx in 2026. That means you're going to be talking about $100 billion CapEx on Google. Whew. 13.62 billion in the cloud, 32% is what that number's going up. Oof, video game numbers, man. The search unit brought in 54.19 billion. Advertising revenue, 71.34 billion, up 10% from 64.6 a year ago, and YouTube advertising revenue at 9.8 billion. Just big numbers. Now, this one's from the Journal, okay? This is talking about Google. The headline here, digging a little bit deeper, okay? This one out earlier this morning, is AI killing Google search? It might be doing the opposite. Now, it's doing the opposite so far, which is astounding, because I don't know how you go full circle on this one. They are adapting well to the AI age. I just read you the numbers of how much money they're taking in, right, for advertising, etc., okay? The AI overview tool, if you've Googled anything in the past few months, okay, you're probably familiar with that little AI tool at the top that gives you a little bit of a paragraph description of whatever you're searching for. And they say that has 2 billion users. Now, I don't know what that means. A lot of times, as in, that's basically how many people are Googling something, right? Google is rolling out an AI mode that competes more directly with chatbots, but they're just talking about the AI overview tool. This tool has 2 billion monthly users. They're just telling you how many people Google is using it, basically, up from 1.5 billion users in the last quarterly update, okay? 2 billion people are not diving deep into AI on Google. 2 billion people are using Google, and now they're saying they're using the AI overview tool. But I can tell you, folks, I'm not a fan of the AI overview tool. I love ChatGPT, okay? I'm trying the Google Ultra Gemini right now. The AI overview tool, one of the biggest problems, one of the best parts about ChatGPT is that it's very difficult to ask a follow-up question, makes it as easy as possible. It gives you kind of a synopsis, but maybe it wasn't exactly what you were looking for. And then you go looking for links potentially. But here's the next part of this conversation, okay? Who's going to be clicking on links, right? Yeah. Now, search growth, though, it's a staggering number, man. Search revenue up 12% from a year earlier, okay? Look at this search growth quarter by quarter, and look at the forecast of what they're looking for. They got big numbers, man. They're not slowing down, okay? But here's the last part. The real test of Google's search engine resilience still lies in the future. One issue is that while AI overviews are boosting how many links users see, industry metrics show people are not actually clicking on any revenue-generating links as much. You don't need to. Okay, I don't click on anything when I go to ChatGPT, right? There's going to be a radical transformation in the next couple of years. Google will be okay, but they have to transform. And the AI tool, the search tool, the way we use it, you know, the Google Ultra they have, $250 a month. Yeah, they're AI Gemini, but search is a problem, man. Yeah, talking about ChatGPT. The company can modify Chrome to better compete against the new entrants. Now imagine that for antitrust, right? They're going to modify Chrome to compete against new entrants. Just imagine that. Of course they can. We're going to come back. We'll finish up with Google. We'll talk some Tesla. When we get back, folks, S&P's flat. We'll come right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This portion of the Morning Market Kickoff is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. You have Google shares up by about $7 this morning. We're trading right now back to a 5-minute chart on their earnings. We're pushing pre-market highs. You spike up last night to about 199, and we're trading at 198.07. Now, one of the benefactors of them spending an extra $10 billion is NVIDIA. You're going to pop about $2 right now in NVIDIA. You're trading at 172 and change from 170. You jump over to Amazon, slightly in the green today as well, by about $1 from 229. We jump over to Tesla. Not in the green. Yeah, Tesla shares. Now, it was about a $25 move in either direction priced in. Okay, and you're almost there. You're at what, $22 move right now? So you're right within the expected move. Nothing outlandish in terms of the volatility. And you are marching down towards this $300 price point. We hit 309.40. You basically touched 310 on 2 occasions. We're jumping around at that level right now. And yeah, so you put this chart up here. Okay, that's the highs. That's this little acceleration. That's where we almost accelerated to in June. And you jump back to Tesla numbers. Now, first of all, anytime you got Elon telling you that they're going to have a rough few quarters, you better be careful, man. He's the king of overpromising and under-delivering. Probably could have a few rough quarters. And listen, I would agree. Who's going to buy an electric vehicle after the $7,500 kickback ends? Imagine, as I said a day or two ago, being the salesperson on the lot that day. I don't know how you do it. As in, there's how do you sell somebody a car that's going to be $7,500 more today than it was yesterday? And then the last part about that conversation, okay, as in, what happens if they have to roll out some price cuts, which they've done before, right? We all remember as Tesla cut, and then everybody who bought had a car that was massively underwater instantly. But yeah, you take a look at some of this. Is another one for Tesla. Difficult times ahead. Okay. Earnings 40 cents a share. Revenue falling 12%. Folks, any other company would be tanking to zero. Okay. And they are not any other company. I get it. But they're an electric vehicle maker, and they're making less cars. They're taking in less revenue. They're not growing. They're actually shrinking. Right? You can't get a multiple for growth when you're actually shrinking. And in addition to phasing out the $7,500 tax credits, the law gutted federal fuel economy standards that have generated significant revenue for Tesla as well. Steepest revenue fall since 2012. Yeah. Man, right? It just goes to show you the glory days. Okay? Year-over-year increase in total revenue. They're a decreasing company. They haven't been growing since second quarter of 2023. Teething pains is what he called it on that call. Yeah. And he, of course, suggested his ownership stake should be higher to guard against activist investors' attempt to oust him. It's quite a 1-2 punch. I think my control over Tesla should be enough to ensure that it goes in a good direction, but not so much control that I can't be thrown out if I go crazy. Pretty sure that's where he is right now, because any other CEO would have gotten tossed out forever ago, right? He needs more control. Any other CEO. This is bringing reason to an unreasonable conversation, folks. Okay? Man. Yeah, and the regulatory compliance credits, $439 million, down 26% from the first quarter, down 51% from a year earlier, and that revenue stream is going to be in big trouble, okay? Because he eliminated penalties from automakers faced for failing to meet fuel economy standards. It's like left, right, nonstop. All right. Now, before I get out of that one, I got another article queued up on this one as well. Yeah, we're going to take a look at UNH in one moment. I know that thing's moving for sure. But I want to talk Amazon. Where's the Amazon article? There it is. Okay, check this one out, folks. This is a great one from Bloomberg this morning. I was reading it, on my coffee this morning. Walmart's catching up. They got a long way to go, okay? And the multiples on Walmart mean that it is priced in that Walmart's catching up, okay? I've done this before, but you know, stocks have rip-roaring rallies, and then they have to grow into those expected gains. Walmart goes from $4.33 up to $20 over the period of a few years, and then it takes 15 to 20 years before you make the next run, and then you do it again. We've quadrupled in price yet again, from $25 in 2017 to $100, where we are right now. A lot of growth into this equity, okay? The PE multiple, forward PE multiple on Walmart, trading like some of the tech companies at this point. But you go over to articles like this, and it helps you understand why. I bet you the Mr. Jazzy, Mr. Bezos, they're reading this one this morning, okay? Amazon gave Prime Day shoppers more time to browse, and what did they do at that time? They price shopped, and they ended up at Walmart. Yeah. Now, Amazon still crushed it, okay? But you look at these growth numbers on Walmart, you better believe it, man. Walmart's week-long deals event, I'll tell you, I bought some Walmart stuff, I think, as well. I bought some air filters I was talking about on Prime Day at the time, but I was looking at Walmart. You know, hey, Sam's. Sam's didn't have any deals on that, I don't think. But nonetheless, I am a Walmart Plus customer as well. And just jumping around. Spending on Walmart.com grew by 24% compared to its comparable deal period a year ago. Okay, and that's 6 times faster than Amazon Prime Day's year-over-year growth. Amazon Prime Day didn't have a tremendous amount of growth. Walmart does. That's the difference. Walmart's web traffic up 14%. Amazon was flat. Walmart's app use up 22% compared with Amazon's 3%. Now, the other side of this conversation is everybody already has Amazon, right? They already have Prime. Not a lot of people have the Walmart Plus app compared to the Amazon app, okay? Percentages on small numbers can grow a lot faster. Walmart's got a lot smaller numbers. I think Amazon is still 6 times. We're going to get into it, yeah. So Amazon still dominates e-commerce. They still capture 4 out of every $10 spent. Amazing. 40 cents out of every dollar online, okay? Amazon's 403 million web visits during the 4-day sale did not grow. Didn't grow, but guess what? They were 6 times what Walmart had. So all of this article is about Walmart growth. Meanwhile, Amazon had 6 times as many visitors. 600%. We'll finish this up. We're coming back for the open. S&P's up by 4. Don't go away, folks.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We get the S&Ps open positive by 8 points. We're catching a little bit of run to the upside. We're challenging the session highs. We had pre-market. We're up to a high of 64.06 and 64.07, and we're at 64.05. NASDAQ 100 up by 80 points. And yeah, how about UNH? So UNH diving lower, and it seems like it's never ending here, man. And it makes these they've been written about forever. Okay, I'm surprised it took this long in terms of the number of articles you read about with them sending people into billing practices, whatever it is, but the company's saying it's facing a DOJ investigation over its Medicare billing practices. Now, take a look at this thing, okay? Yeah, how many times are you going to drop out of bed, man? Right? You got earnings last night in April. You get the escalation on the fears of the investigation, etc., and we're right back down to 285 after being as high as 326 at the beginning of this month. 326. We're down by $40 off that price point. You're down by 2.3% this morning. Speaking of being down, IBM. All right, we're down by 7.9% right now. IBM out with their numbers. And the headline here is software revenue. Okay, revenue and gross margin were below consensus. They raised their forecast. Revenue up 8%. Software revenue climbed about 10% to $7.39 billion. The market was looking for $7.43. Hybrid cloud revenue, including Red Hat, showed 16% growth. The software unit's gross margin of 83.9% was barely narrower than 84%. Imagine that. You're supposed to make 84%. You make 83.9% margins, and the market comes for you. Clients reprioritize their spend to hardware. Well, Google knows that, right? NVIDIA knows that. Revenue from consulting up 3%, $5.31 billion business in consulting. Whew. IBM called for over $13.5 billion in free cash flow this year. It's a big number, man. But yeah, they've been on quite a run, so it better be a big number. And another story of not living up to expectations. Look at this. This is such a classic breakout of the channel, man. All right, let's back it up even further, right? In two ways. Downward channel from 2012. You finally break above it. I remember, it's two ways. So look how it breaks so perfectly on both sides of it. So the upward trend channel hadn't formed yet, okay? Just look at the downward trend channel that we're talking about on a longer term basis. This is a monthly. You bump up against the top, you bump up against, you bump up against, you bump up against in 2021. Finally you break out in October 2021. Decisive breakout, but that wasn't the buy. You come back, you test it perfectly, okay? Yeah, you break out with 113 million shares. You get some strength there. You come back and test it with 96 million, and then we take off from 130 to 296. And look at the way we broke out from this uptrend in the same way. You break out with 130 million in January last year. You pull back on 98 million in April of last year, and then you take off and you almost double in share price over the period of a year. Whew. Let's take a look at the volume on this thing a little shorter term. Yeah, we got volume from their last earnings, and you're going to get volume from this earnings as well. It's going to be a big day for them doing this type of volume, down by 8.3% for IBM. And yeah, another story of, man, they're looking for beats here, right? They're looking for beats the likes that Google gives you, man. Okay, Google's up by 3%, and they just crushed it. They took in $2+ billion extra to the bottom line. They're still going to spend $10 billion extra of that. Microsoft up by 0.6%. We check in on Tesla shares, down by 8.6% right now. Amazon up by 0.9%, pushing 230. And yeah, NVIDIA up by 1.2%. Meta shares up by 0.8% right now. We jump around to the banks. They were having quite a day yesterday. JP Morgan slightly in the green right now. We got Bank of America up by half a percent. Wells Fargo and Citi. Let's see how the airlines are doing. All right, Delta's down by 1% right now. United as well. We'll take a look at some retail. All right, Walmart flat this morning. Target. Let's check in on those meme stocks. Coal's up by 1.9% right now. AMC not running this time. AMC down by 1.8%. Checking on the streamers. Disney flat. They're on quite a run. Netflix shares. Quite a little pullback. We got some selling going on in this equity, man. You gap lower on their earnings. You do 10.6 million shares on the daily. Let's take a look at the weekly. Yeah, we're probably coming down to test this volume acceleration where we got above the highs of February. You accelerate to 1100. We're trading at 1177. Pressures to the downside on Netflix right now off the highs of 1341. All right. And yeah, finish up the conversation on Google. So the number of users they have, okay, when you look at their users versus everybody else, but there is going to be a substantial shift. That's all I can tell you for sure, right? Take it for what it's worth. There's going to be a monumental shift. Google is well positioned, but search is going to change forever. You know, you talk about these agents, right? It's going to be AI agents everywhere. We're not going to be typing into Google and then clicking on links. I don't know how the advertising is going to come into this in the way it does for Google right now. And, you know, you got YouTube. YouTube's going to be there forever. They're a juggernaut. But you're talking about search revenue, 50, 60, 70 billion dollars, right? Search revenue, second quarter, 54 billion. That's 90 days, folks. And meanwhile, though, the search numbers, it's almost like, we'll bring it back to Sam's, Darth. Let's bring it back, baby. It all circles back. The future's changing very fast, folks. Okay, I often talk about when I go to Sam's, they have the scan and go feature. I encourage you to try the scan and go feature at Sam's. Okay, it's coming to Walmart. It's coming everywhere. You scan the items, you throw them in your cart, you walk through a little gate when you leave, and the sensors scan everything and make sure you already paid for it, and you walk out and you don't have to see a register. Okay, the kicker is, though, is that every time I go to Sam's on a Sunday where it's just action-packed, doesn't have to be a special Sunday, Sam's is just action-packed, can't even find an aisle with space, everyone's getting their weekly groceries, right? I see 100 people sitting there in lines waiting to check out. Why is that? It's because the technology's there, but they haven't made the change because people don't like change, and they don't do it unless they're forced to do it. You're going to be forced to do it. It's coming, okay? All of that's coming, and the way that we search for things is changing forever as too. There's no reason to click on a link ever again. I want to search something, and I want you to tell me exactly the answer, and that's where we are. We're coming right back, folks.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds for both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at direction.com. Read carefully. Distributor Foreside Fund Services, LLC. Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We have the market sitting right near record territory. We're at 63.98. You hit 64.07 right after the close last night, and we're positive by 2 points on the S&P's NASDAQ 100, up by 37. We check in on Google, up by about 3%, but they give back. 2% now. They give back 195.05. Found myself wondering, these companies are going to own the world, okay? But the impetus to spend right now, you're seeing it again. This jump up in spend, it's never going to stop. The moment that they get the chips they want, they're going to need the better chips from NVIDIA, right? And they're going to have to monetize it for sure. Okay. Let's jump around to some other equities. We haven't talked about Chipotle yet. So, yeah, Chipotle dives lower last night on their numbers as well, down by 12.3% right now. You take a look at a longer-term chart. Oh, how the mighty have fallen, right? Right back to that April low, man. April low, 44, 46. We just hit 45.31 right now. And, yeah. There's the headline for Chipotle. Cut the same-store sales forecast, and that'll do it, man. Flat same-store sales growth this year, down from its prior projection of low single-digit percentage increase. 33 cents a share, right in line. Revenue misses, though. You can always finagle earnings a bit, folks. You can't finagle revenue as much. Okay. Net sales rise 3% for the company, but the company's same-store sales shrank 4%. The market was looking for a 2.9% decrease. I'll tell you, it was a running joke for a while, Chipotle, right? Online, the quality of how much you're getting, the scoops, right? They're being frugal with their scoops. I feel it as well. I've pulled up Chipotle a couple times on Uber Eats or something, and I say to myself, man, that's crazy. I'm not paying $25 for one that, it's an expensive product. And everything's expensive, and they don't have the growth they had. So they're saying they're returning to positive comp and transaction trends, but the market's not believing them, down by 13%. Second quarter net income, $436 million, down from $455. And it is going to open 300 plus new restaurants this year. One a day, right? One a day. Brand new Chipotle coming at you. But yeah, what do we got on volume here? We got 67 million shares already traded. It's Thursday. We're going to do big volume today on a day like that. And we're coming into about 90 and 108 million when they accelerate higher. Look where we are, right back to their last earnings. Just looking at where this thing can come back to test. Yeah, July of 2023. We're almost there. Highs above 43.50. We're trading at 46.23 right now. All right, we take a look at some other food shops. Mickey D's, McDonald's. Now, brought up this chart many times. If you're looking for Mickey D's, man. Okay, put this thing on a monthly. You got a well-defined channel. Back going 10 years on Mickey D's, man. You're approaching the bottom part. You hit the bottom. You had a little. That selling worried me last month. You know, you really had an acceleration in June. Came into these lows. But look how close we touched that line. Nonetheless, Mickey D's down by about 0.7% right now. Jump over to Pepsi. Off the lows, Coca-Cola. With their numbers this week, trading a little bit lower. Ooh, look at Amazon. Okay. Oh boy. Okay. It's SEC earnings season. And look at that. So they sell Google on the open and buy Amazon. Microsoft they buy. Meta they buy. NVIDIA they already bought on those numbers last night. Tesla down to 301. All right, we look at other equities out with their numbers. ServiceNow out with their numbers. So, software stock hiked their guidance for subscription revenue. They beat expectations. And yeah, we pulled this one over. AI growth. That's all you want to hear, man. Stronger than expected second quarter results boosted its guidance due to artificial intelligence adoption. Every business process in every industry is being refactored for agentic AI agents. That's what I'm talking about. They're going to be everywhere. Revenue $3.22 billion versus $3.12 earnings. They take it to the bottom line at $409. Subscription revenues $12.77 billion. Wow, quite a number, man. All right, let's see what else we got going on. So Las Vegas Sands out with their numbers. You trade higher last night. You're ripping lower today, but we're up by 2.8% right now for Las Vegas Sands. And yeah, they top expectations, 79 cents a share versus 53. And they take 3.18 billion in revenue versus 2.83. Now this is a big Macau. Look at that expectations. From $30 to 50. Well, that's a little worrisome though, huh? You've taken just... Look at that, right? Sometimes it's an art, not a science, folks. The trend is negative prices right now on that equity. I don't know where you meet the bottom of it, but where's the line best fit? Something like that on that trend going back 10 years? Lower lows, lower highs. You get Las Vegas Sands, though, and their numbers up by 2.8% right now. T-Mobile. What are we up? 6.5%. Strong numbers for T-Mobile as well. They beat on earnings. They beat on revenue. So American Eagle, you were up as much as almost 20% on this equity pre-market, up to $13.95. We're at $11.83 right now. Well, if you're going to find a sign of strength at the bottom, folks, that's how you like to do it. Would have been nice if we could have just taken out everything since March in one big bar, right? Which almost happened. But American Eagle up by 9.3% right now. And guess why? They've got Sydney Sweeney. Yeah, you gotta love how one person. We'll be right back, folks.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
So American Airlines out with their numbers, down by 8.8%. It's been quite a run from the lows of $8.50 to $13, but we're at 19 to kick off the year, right? And you jump over for American. Scales back the profit outlook. Third quarter forecast falls short. Yeah, they got some issues, man. American Airlines on Thursday forecast a 2025 adjusted per share loss of as much as 20 cents or earnings of as much as 80 cents. Quite a range, right? So they're going to either lose 20 cents or make 80 cents. They previously said they were going to make between $1.70 and $2.70 in January. Now, their charts changed a lot since January. Okay, the consumer has changed since January. The travel outlook, the uncertainty. But yeah, you got American down by 8.5%. And then getting back to that American Eagle. So this thing's already been on a run, and they are going to have Sydney Sweeney, who's one of the hottest young actresses on a run right now in terms of catching headlines, catching everything. And she's going to be in their campaigns. You go from $9.85 on Monday, close out yesterday at almost 11. You run up to 14, but we're giving it all back. And yeah, this thing, man, you talk about volatility, right? Just shows you sometimes don't get married to a stock, folks. Look at these roller coasters. This thing looks like a mining equity. It's had so many highs and lows. If you like it at 1140, well, you're getting in at 2000 prices. The one thing I will say on an equity like that, folks, okay, you can open and it can be at zero when you're dealing with an equity that's this volatile, that has this many problems. But boy, this $10 area, technically, you can't find a much better technical area longer term. Look at that $10 area. 2014, 2017, 2022, 2023. Here we are in 2025. All right, folks, thanks so much for kicking your trading day off right here with me on the Morning Market Kickoff. Basil Chapman's up front next with the Tiger Technicians Hour, folks. Steve Rhodes after that.